Thanks for being here today.
Thanks for having me. I'm excited to be here.
So you saw in the audience about a good portion were in Airbnbs. Are you staying in an Airbnb yourself?
Oh, always, yeah.
Really? Is that something that you have to do as part of the company?
It is required that all employees travel on Airbnb for business. Also, for personal travel, we give our folks employee coupons, $500 per quarter to travel.
Wow, that's pretty good. That's pretty good. So if you need a job, Airbnb, it's good perks. So before we get too deep into the questioning, you have some news today. You just rolled out a new version of your search product, right? So
That's
hopefully we'll be able to get that up on one of the screens. Tell us a little bit about why you changed that and what's new.
Right. So this morning we rolled out a new version of our search on the website. You can load it up right now and check it out. We have a fairly unique search problem. We have thousands of properties in most cities. And everyone is unique. And as a result, people do a lot of comparison shopping. They look at a lot of properties before they choose to book one of them. And so we did some user research, and a few things that we found were people were going back and forth between the search page and the profile page many times. And I happen to always open a new tab, but I'm gathering most people probably just click through and then hit back. It's a very slow, arduous experience. We also saw that when people were going to the profile page, they were looking at two things: the pictures, they were flipping through the pictures, and they were also looking at the map. They really cared about the location. Now, previously, our search page had basically three different modes. There's basically three search engines in one. The default was basically a list view, but then you could toggle to a full-page map view or a picture view. But you had to choose between one or the other. You couldn't do all at the same time. So our new search experience is basically 40% of the screen is the map, and the remainder of the screen is all large pictures. So you can really interact with the map smoothly and see everything there. And on the thumbnail pictures, they're much bigger, and you can actually click through them without leaving the page. And so what we've seen by doing this is that people are spending more time on the search screen, they're doing less back and forth, and they're ultimately going deeper into the search results and converting better.
Okay, cool. So you're driving conversion. You've been doing a lot of that. About a week ago, you gave a presentation at Y Combinator's Startup School, and you said that you had served 9 million guests, which was up from 4 million at the end of last year.
Right. So we've been around for 5 years now. Mm-hmm. It took 4 years to service our first 4 million guests, but in the last 9 months alone, we've done another 5 million. So it gives you a sense of what exponential growth can look like.
Okay, so where's that growth coming from? Is it coming from new geographies? Is it coming from better mobile products? Like, what's driving those conversions?
Believe it or not, the primary driver of this growth is word of mouth, and that's why this growth is scaling. Every person who uses Airbnb refers to more people. Now, they might not do that overnight, but over the course of a year, that's what happens. And so even though the base of users has gotten quite large, overall awareness is actually still low, and it keeps compounding, it keeps doubling, tripling.
Okay, cool. So about this time last year, there were a lot of reports, including in TechCrunch, that you were raising funding. I believe it was about $150 million from Peter Thiel and Founders Fund. Whatever happened with that? Right.
So yeah, that rumor was about a year ago. We never actually confirmed it, although we did raise money a year ago from Peter Thiel's Founder Fund, $200 million.
Okay.
Yes.
Wow.
And that's actually the largest investment that Founder Fund had done to date.
Okay. So why haven't you talked about it before now?
Yeah, we've never really drawn too much attention to our fundraising. We're a consumer company, so talking about big numbers isn't what gets users to sign up. It's really more of a distraction. We'd rather stay focused and keep the dialogue about the product experience.
Okay. So this is kind of an odd question, but was Zuck in that round? I heard some crazy rumor that that was a possibility.
No, I don't think Zuck was in that round.
All right, fair enough.
At least nobody told me.
So I want to talk about the regulatory issues that you've faced. And right now it's New York City. You've also come under fire from regulators in other markets. Some of them you've cleared up, some of you haven't. In New York, first there was this case with one of your hosts who had been fined, or his landlord had been fined, and more recently the Attorney General requested a lot of user data for you. So what's happening in New York specifically? Why are they coming after you so hard?
Yeah, well, let me talk about New York in a second, but let me give a little context.
Okay.
What we're doing is obviously incredibly new, hadn't really been envisioned before. Previously, there were basically two kinds of people. Well, there were people and there were businesses, and there were rules for both. And now suddenly, with a sharing economy, those two entities are merging, right? And you have people who are acting like businesses but are still people, et cetera. And they don't fit the confines of kind of traditional rules. That doesn't mean it's a bad thing. It just means that we have to have a dialogue about, what are the concerns and considerations. And that's something we've been trying to do as proactively as possible in cities around the world, including New York. In New York specifically, there's a bit of a public debate going on right now. And New York is not one entity. There's multiple groups within New York, right? And so there was a high-profile case earlier in the spring. Somebody was fined by the enforcement office, got some headlines. It turned out that that case was actually perfectly legitimate. We helped that host appeal the case. And later the court said, actually, this fine was an incorrect ruling by the court, and they threw it out. Now, with the Attorney General in New York, we actually see eye to eye with the Attorney General on a lot of facts, which is they're concerned about a few users that are quite large, that have up to 100 properties, and they're concerned about that specifically around taxes. And we've said we actually believe in taxes, and we also understand that you might not want users who have that many properties on our service, and let's have a dialogue about that. Our approach has been a little bit different, though. The AG's approach has been to basically demand user data, and not just on these users, but all users. And we didn't feel that was appropriate given the concern, and so that's what we're standing up for right now.
Okay.
So this will take a while to play out. I think what's important, though, is once we do initiate a dialogue and make it clear what we're doing and what the benefits are, we actually see a very positive reception. So like one of the things we're doing to help this along is we released an economic impact study in New York showing that over the last 12 months, Airbnb has generated $630 million of economic activity in New York City. That's $200 million went directly to hosts, and another $400 million was spent at restaurants and shopping. And so we share this data to the city, and these are obviously substantial numbers. But what's even more interesting is that our properties are spread evenly throughout the city, whereas the hotels are often very concentrated in different neighborhoods. And when people are spending this money on food and shopping, they're doing so in the neighborhood of the Airbnb. And so a ton of tourism dollars are now flowing to places like Brooklyn. And this is hugely beneficial to the community because these are small businesses, the money stays in the community longer. And so when cities hear this, they say this is actually really good news. And we've actually had similar conversations with some cities here in Europe, most recently Hamburg, which resulted in a change of the law. A 30-year-old law was changed just in July. And also in Amsterdam. Earlier this year in Amsterdam, the city, again, some headlines, a lot of concern about what was happening there. Within 6 months later, they did a complete 180 and actually published a public letter on their website endorsing Airbnb as something that's good for the city.
Okay, but so I actually want to talk about the economic impact study in a minute, but just to go back to New York or really any city that or jurisdiction that is looking into this. Do you have a plan B? I mean, if somehow things don't go your way in New York, do you just pull out of that market? And, how do you think about that?
Well, there's a number of concerns. I don't think it's a binary thing. There's talks, tax, safety, et cetera, issues. So I think there's good solutions for all those things. We have to figure out exactly what that is. There could be a spectrum of options. But I certainly don't see it as binary.
Okay. What about this illegal hotel issue? In your economic study, one of the feel-good stats is that 87% of your hosts are actually renting out a portion of their home or renting out their home when they're on vacation.
Right.
But that means that there's another 13% that are listing multiple properties, that, they might be a landlord that, is just not writing leases anymore to get around rent control. or it might be a certain person, signing multiple leases and then subletting as time goes on. So, I mean, wouldn't it be really easy for you to just say, you just can't do this, so that there are no more Toshis of the world?
Right, right. That's right. So the vast majority of the users are renting their primary property. That's about 87% in the New York case. So what to do about the other 13%? We would love to have a dialogue with the city and figure out where to draw the line in there, because it's not as easy as saying 87%, 13%. There's a lot of interesting side cases in there. Once we come to an agreement, we're happy to abide by whatever we agree on. But right now, that's not what's happening, right?
So, but that's something that, do you do sort of on a city-by-city basis, or is this something where you think about it in a more broad global terms where, this is sort of a decision that you make for all of your markets rather than just, making exceptions for one or two different places? Yeah,
we're figuring this out as we go. I mean, we'd love to just have one policy globally. However, it is more complicated than that. So we're open to having individual dialogues, and we're still figuring out what is the right balance between the individuals and the concerns that cities have. And it varies by geography.
Okay. I'm also kind of curious about this from the other side, because you say that you're helping people stay in their apartments. More than half are non-traditional workers. They're either freelancers or doing things on a contract basis. But then you have the flip side where, for every Airbnb that is being rented out by a landlord, for instance, you're basically taking housing off the market, especially in cities like New York or San Francisco, where there's sort of a constrained supply to begin with. So aren't you sort of artificially making it even more constrained?
I think you can look at it both ways. So in one sense, we're actually helping people stay in their apartment who might not otherwise be able to afford to pay rent. And we know that, well, at least in Berlin, 47% earn below the median income and are using this money to pay for critical expenses like the mortgage or the rent. So I actually think we're helping people stay in the community. The idea that extra units are being kind of hoarded, again, most of our folks are renting out their primary homes, so that's not what's happening. In a minority cases, people do have second homes, but the actual number of units is so small relative to the housing stock. That's not what's driving up prices in these communities. In San Francisco specifically, the issue is that tech workers from around the world are coming to San Francisco because of all this innovation that's happening, and the city has not built any new housing in at least 3 or 4 years. Now that's about to change. There's a ton of skyscrapers going up, and hopefully we'll get the balance back. But that's the bigger factor when it comes to the increasing housing costs.
So how much of your revenue actually comes from the 87% versus the 13%?
It's roughly that split.
Really?
Yeah.
Okay.
And listen, the inventory stock is elastic, right? Mm-hmm. So just because you remove 5% of the inventory doesn't mean your revenue goes down 5%. You just could shift that on to the other inventory.
Okay. So since we're in Berlin, let's talk about Wimdu and what happened there. We had Mark somewhere on earlier today, and he wouldn't comment on Wimdu and Airbnb specifically, but Brian Chesky has said in the past that sometime around the 2011 timeframe that you had discussions about a possible acquisition. So what happened there?
So this was around the time of spring 2011. And as is the pattern, they kind of came out of nowhere very quick, seemingly with a lot of momentum. They've been very successful with models that are direct sales focused, much like the Groupon model. I think where it got challenging trying to do the Airbnb model is that you can't build a community through sales. And so I think that was the original approach, and a lot of people, I think, expressed interest in those sales efforts, but then ultimately didn't stick. Meanwhile, we had a lot of momentum ourselves. We were already in Europe, and we also had been spending a lot more time developing the product. And so, I must admit that summer, it was a little nerve-wracking, and we did have some conversations, but ultimately we decided that we had to stay true to the things that we believed. And we didn't feel like we shared the same values that Wimdu was about. We've spent a lot of time building a certain kind of community and building our product a certain kind of way, and it hasn't been for the sake of maximizing revenue or valuations. I mean, that is a nice side effect of being successful, but we weren't that mercenary about it. We like to think of ourselves as missionary about our mission.
Okay. Can you expand on that? I mean, ultimately, how did you win that fight when you've got a built out distribution network? I think they had 400 employees or something crazy like at that point, and 90 million in the bank.
Right.
And where are they now?
Right, exactly. So yes, we did have to respond, right? There had to be a plan B. It couldn't be business as usual. And that's the time when we opened up multiple offices throughout Europe and got our own local teams. And we used those local teams to strengthen our relationship with our community members and also incubate new communities. So they were doing a bit of that, although it was more sales-oriented. We also got local teams, but we were more community-oriented, strengthening our existing relationships as well as trying to foster new ones through things like meetups, et cetera. So there was definitely a concerted effort in the second half of 2011 and even into 2012. Ultimately, what happened was, I think, our momentum plus the network effects of this business allowed us to do a better job supplying supply and demand than they could with their smaller network, as well as the product and all that, of course, that supported that growth. But scale does have a true advantage. There's been a number of companies, a number's an understatement, probably 100 companies have tried to clone this idea in different countries, and none of them have succeeded in the way that we have.
Okay. So how big is your global footprint right now? And not in terms of users, in terms of personnel or the number of offices that you have, and where does it go from here?
We have about 500 people globally. They're located in about 12 different offices. We have about 500,000 properties around the world. 300,000 of those are in Europe. So to kind of put our strength in Europe in perspective, the majority of our business is actually in Europe at this point. That certainly wasn't the case back in 2011, but that has been the result of our investment.
Okay. Why Europe as opposed to other parts of the world?
I think this idea actually has some history here. And there's a lot more appreciation for travel and experiencing culture than perhaps in the US, because we're such a big country. Many people don't ever leave the country, or if they do, it's to Canada or Mexico. Whereas in Europe, to go anywhere, you practically leave the country, and you actually very quickly experience different culture. And there also had already been an industry of private apartment rentals. So I think that certainly has helped. I think the economy, too, has played into this a little bit. We've seen it specifically in Spain and Italy. A lot more hosts kind of come onto the service. If you look at the unemployment numbers, people are having trouble holding on to their homes. They don't have other options. And here we are providing a tool for people to make ends meet for themselves. We're empowering people to take their future into their own hands and guess what? Have fun while they're doing it. Experience different cultures, welcome guests. So I think that has had a lot to do with it.
Okay. When you think about growing the number of users that you serve, doubling basically in a year, and where that growth has come from, where's the next doubling come from? And is it going to happen as quickly? I mean, are we looking at 20 million for next year around this time? Or, how do you keep that hockey stick growth going?
Yeah, so we've roughly doubled inventory over the last year and basically tripled demand. And I don't expect that to change too drastically because the primary drivers of that growth is this word of mouth. And so why is this word of mouth happening? It's because the type of experiences people are having really hit an emotional chord. And after people's trips, they're always talking about what they experienced, and inevitably Airbnb plays a major part in that story. So that's why the word of mouth is occurring. I would say in Asia, we're expecting actually disproportionate growth. It's taken a little while to gain traction there, to gain critical mass. There's just less travel between Europe and Asia, or the US and Asia. Also, there's a bigger language barrier. So the cross-pollination took some time. But now we have critical mass of properties in many of the different cities, and we're seeing sustained strong growth there. So I expect that to be a big part of the story in the coming year.
Okay, so what's your exit strategy? I mean, you've been around for, I guess, 6 years now, 5 or 6 years. You've raised a ton of money, as we just learned. I mean, at this size, are you committed to remaining independent and IPOing at some point? I mean, how do you think about that?
We have a very big vision, and I don't think we could do that as a subsidiary to another company. So we're definitely committed to remaining independent. Regarding IPO, that's a means, not an ends. We're very well financed, given the fundraising and such, and the strength of the business. So I don't anticipate the need to do that anytime soon. Also, with our investors, we've set very clear expectations from the beginning that if you want to invest in our company, we do have a very long vision. We don't want to be acquired. We are not going to return your capital within 3 years, 5 years. Think in terms of 10 years. So I think everyone's aligned in that, and we don't have any immediate plans.
Okay. One of the interesting things that I think you do, and you've actually been used as a case study multiple times, like doing things that don't scale.
Yep.
Early on, this meant meeting hosts individually. Brian and Joe took that famous trip to New York. Actually hiring photographers and sending them out to your hosts, building the community city by city. What are some of the other things that you can do along those lines?
Right.
Or that you're doing?
Right. We've always found that establishing kind of a nucleus of critical mass in something and then allowing network effects to play off that can be very powerful. I think there's a lot of things we can do to leverage the community to amass local knowledge or provide services for one another. We don't have specific plans that we've announced, but that general playbook I think is very relevant going forward. And let me share maybe a few different possibilities. Like, one is we have this giant host community. How can we create software to pull them together and allow them to create value amongst themselves? Another approach might be to do what we've done with photographers, which some of our photographers are hosts, but many are not. Yet we've created a separate platform and a network of contract photographers, and we offer that as a service to our users. Maybe we partner and we provide value that way. I think all these things can start small and even somewhat manual, and actually accomplish big things over a period of time.
Okay, excellent. Well, I want to thank you for taking the time and being here with us, and I hope that you continue to grow as quickly as you have.
Well, thanks for having me on stage. Thank you.